listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
Well, good morning. Welcome back to Insurance Matchmaking. This is a big day. As you're listening here on the radio, it is November 1st. November 1st means that is the start of the Affordable Care Act Marketplace Open Enrollment. And as we're recording here today, I got an announcement last night, went and looked online. There's a bunch of, they have what they call the window shopping is open. So the last part of the week here, people will be able to preview their enrollments. But time you're listening to this, it actually will be live, and you can actually go to your Marketplace account and re-enroll. We still encourage it. You talk to us. There's a lot of changes. One of the things is, I don't know how much it's the Affordable Care Act or not the Affordable Care Act. That's not what I meant to say. The not extending the expanded tax credits, or it has to do with some network changes. And you've probably heard me talk before about Blue Cross has what's called the E network, and the E stands for exchange. So if you were not going through the healthcare marketplace and wanted to go directly to Blue Cross to buy a plan, these plans aren't available directly from Blue Cross because they are the marketplace exchange. But the downside there is the exchange plans, the E network. There's a lot of doctors who do not take that plan. And I haven't researched at this time, I have not researched to see if they've expanded the network at all on the e-network. But in the past, and my most experience with it was with my clients in East Tennessee, that yes, they lived in the Knoxville area, but they lived outside of Knox County and went to local doctors, and the local doctors were not in network with the e-network. And the only hospital in the Knoxville area that was in network for that plan was UT. And one of the reasons for that is they initially had launched these plans in the more dense populated areas. So the doctors are seeing more people. So Blue Cross had basically negotiated, hey, we're going to pay a little bit less if you take this plan here because we're going to get you more patients. So you'll still make more money. But in the rural areas where, instead of seeing, 30 people a day, maybe they're seeing 15. The doctors kind of want a little bit more of a reimbursement for seeing those patients, and so they stay with just the S network. So, and one of the big things on it is, and I actually was explaining this to Elijah because he's kind of like, huh? But the way they figure the tax credit, it is based on the second lowest silver plan. So what's happening here now is that second lowest silver plan is more than likely in most places is going to be a Blue Cross e-network. So everybody that had, really good prices, that, their net cost on an S network Blue Cross plan, that plan's going to be more expensive this year. And that was one of the things I looked up one of my clients and last night just to kind of see. She's currently paying $7 and change for her plan, and it's her and her two sons. But last year, and then we have to look because they did not qualify for the Children's Health Insurance or TennCare, and it may just have been because it was like at the end of the year. Sometimes when you apply for those at the end of the year, they get turned down. But when you come back around for re-enrollment, the marketplace saying, hey, these people should be on TennCare and CHIP. So if she doesn't have a current denial letter, it's going to, we're going to have to process her application with the kids going on to either TennCare or the what's called CHIP, the Children's Health Insurance Program. That being said, that could raise her premium a little bit because only one person now is using the tax credit. But the difference on her plan, she went from $7 to like $88. So it's not, it's not breaking the bank, but it's still you're looking at $80 more a month. But I think some of that also was because she's on an S network plan. And now with the S network it's costing a little bit more because there are E network plans available that bump that cost up. So in our area, we do have Ambetter and also United Healthcare. So those are some options that, and again, we may move from a silver to a bronze plan. You have the bronze plan, you still have copay. So there's things we can do to alleviate some of those costs. And I've always, one of the things I've always tried to stress to folks when I'm giving them their options. Other than if you're getting the cost sharing the cost sharing reduction on a silver plan, the only real difference between a silver plan and a bronze plan is you're buying down your deductible on that silver plan. Sometimes the copays might be slightly less, but the difference in premium way more that makes up for having a lower premium. But we encourage people to consider some type of supplemental coverage, whether it's a critical illness, a hospital indemnity, a cancer, an accident plan, something that's going to cover that big chunk of money that you'd be charged if you did something happen and you are hospitalized. And we can do that for a lot less money, a lot less cost on your part than buying a silver plan instead of getting the bronze plan. So we'll probably have to get a little more creative that way, especially if people they still want Blue Cross to be their provider and they want that S network. They're maybe going to lean towards the bronze instead of a silver. So it's going to be a case-by-case basis, and we've been saying, for a few months now, hey, you need to review your health plan this year. There's a lot of changes. And there's going to be changes in the premium. Some people who thought they were still going to get a subsidy may not be qualifying because that 400% cap is reinstated because it was not extended. Now, again, it still could be extended. They're still negotiating that partly as with the government shutdown. And as I'm recording today, that has not been settled yet. It could be settled before today when you're listening. But this is a Wednesday. We have today and Thursday and Friday that could change. So who knows what the Senate's going to do. The other, as I have mentioned before, especially those that are going to be above that 400%, we are offering MediShare, which is a Christian Health Sharing Network, and also we can do the 3-year the 3 1-year short-term plans. And those are going to be considerably less than what you would pay for a marketplace plan if you're not getting any subsidy. So those are some things we can look at. I just wanted to put that out there. But I think I mentioned Elijah is here today. I needed to get this stuff out.
A lot of new information.
Information. But if you listened last week, we did a question and answer about Medicare, and and that continued. We're going to air that again, but because there was so much happening with the ACA marketplace, I wanted to get this show out sooner. So I'm trying to get at least one show in reserve. We do have Thanksgiving coming up. I want to hopefully avoid recording that week. Anyway, so where are we going to start with these questions, Elijah?
Yeah, so speaking of all the changes in marketplace, there's a lot of questions that we've been getting, and so we'll start right here. So, Matt, when can I sign up through the marketplace?
Well, and I kind of already covered that. It is November 1st. It's actually November 1st to January 15th, but if you want your insurance to start on January 1st, then you need to do that enrollment by December 15th. Now, again, you can passively re-enroll. If you do nothing, you will re-enroll. I imagine from December 15th, especially in January to January 15th, I think we're going to be busier than we normally are in January because people are going to find out that I didn't do anything. My premium really jumped up. What am I doing? And they'll want to change their plan for February. And that's the other thing I'm going to very much encourage people. Don't just say, well, I'm just going to cancel my plan. I can't afford it. Give us a chance to see if we can't work something out. Like I mentioned in the beginning here, maybe you're on a silver plan and it jumped way up. There, a bronze plan could still be a good option for you. A bronze plan is way better than no insurance.
So let's say, January 21st hits and I still haven't enrolled. Is there any way I can enroll after January 15th?
Most likely not, but it just depends on if you have what we call a special enrollment. We call the SEP. You've probably heard me say that term SEP before. That's how we say it. We go shorthand. It just fits, and it fits right in with my military career. We did everything in acronyms. But that special enrollment period, you have to have one. There had to be a reason that you don't have insurance on January 21st. It can't be because you didn't renew your marketplace. It can't be because you didn't pay your premium, so they canceled you. It has to be a valid life change, like you just turned 26, you changed jobs, and now you don't have coverage, or you moved from another area. You had a plan when you lived, and it can be another county. It just be that you changed zip codes, but if you had a plan in another zip code but it's not available where you've moved, those are reasons you could get a special enrollment.
Okay. Now, Matt, how can inaccurately reporting my income affect me?
Oh, that's a biggie. Erring on overestimate your income is not as big a deal as underestimating your income. The subsidy is called the APTC, Advanced Premium Tax Credit. That tax credit goes towards your premium. So the premium on your plan may be $1,100, and you're getting a $900 tax credit based on your income. You're still going to pay $200 a month, but that's not your premium. That's just the share of the premium that you're paying. Now you go to file your income tax the next year, which is what catches a lot of people off guard, because you don't find out till April, March, April, depending on when you file your income tax, that if you underestimated your income, then you owe back. And it's not a matter of, hey, what you got as a tax credit raises your taxable income. It actually raises your tax because you received a tax credit. So if you overestimate your income, you're probably going to get a refund or you get a lower tax bill. But if you underestimate your income, you're going to owe more taxes. So it's very important to make sure that you report your income as accurately as possible.
And is that for the upcoming year or for the previous year?
It's actually going to be for the upcoming year. It is one of those things I always say, this is so great. We're in the enrollment season. We ask you, because they generally recommend that you, and this is how you prove your income to the marketplace, to send them a copy of your income tax. Well, you're sending them last year's income tax to estimate next year's income. This year doesn't even come into the picture. So it's just confusing. It's like, and that's why a lot of times I'll talk about this year and last year when I'm really meaning this year and next year, because I'm in enrollment season. It's, in a lot of ways in my mind, it's 2026 already.
So what all qualifies as income?
All right, there's a lot of things that qualify as income. Obviously, if you're working and you get a W-2, that's income, or even if you're 1099, you're getting commission. You get that 1099, that's your taxable income. Some of the things, though, that aren't taxable will come into what they fall under what they call your modified adjusted gross income, and that could be Social Security, disability, just drawing Social Security if you're 62 or over. So that will count as income for the purpose of calculating your advanced premium tax credit. Now, alimony is income. Child support is not.
Oh, interesting.
Yeah. So, and in reverse there too. Also, if you're paying alimony, you get to count that as a deduction when you're estimating your income. Also, if you're paying your student loan interest, that student loan interest is a income reduction. Not your student loan, but the interest itself. Now, I've run into a lot of times people think, oh, I sold my house. I'm gonna have. Generally, you don't report selling your house as income. Now, if you had a rental property and you sold it, yes, you need to get with your accountant and figure out how much of that is going to be considered income, because you probably had some depreciation expenses and things like that. But an inheritance generally is not counted as income when it comes to reporting for your tax credit. Now, if you're on TennCare, an inheritance is going to mess you up big time, because whether you're counting it as income or not, TennCare, Medicaid goes, oh, you got a nice pool of money here. You can pay for your own health care. So you have to, so those are some things that can come up with that. But generally, just inheriting some money from someone, or you're a beneficiary of a life insurance in your, whoever you were the beneficiary of, whether it's your parent, your spouse, sibling, coworker. That's not income either. So it's like, if it's a windfall, and that money can affect your Medicaid. So I always tell people, like, if you get an insurance claim or something like that, don't put the money in the bank.
So, speaking of that,
All right, so we're actually up on the break already, so give us a minute and we'll be right back.
Join Upper Cumberland Habitat for Humanity as they celebrate 30 years of homes, hope, and habitat. It's the Remix and Mingle November 10th at the Upper Cumberland Habitat Restore, 560 South Jefferson in Cookeville from 5 to 7. Bring the kids out for balloon art, face painting, snacks, entertainment, and more. Tickets are just $10, and that goes right back to the Upper Cumberland community to continue helping families build affordable housing. The Remix and Mingle celebrating 30 years of Upper Cumberland Habitat, November 10th at the Habitat Restore, 5 to 7 p.m. Tri-Lite, the people who bring you better internet, are now bringing you better wireless. Introducing Tri-Lite Mobile, a new wireless service for our area. Enjoy nationwide coverage, the freedom to bring your own device, and budget-friendly plans, all backed by the local team you know and trust. Right now, when you sign up or upgrade your internet service, you'll get your first line free. Ask about Tri-Lite Mobile today. Call 833-847-0824 or visit trilite.net. Some restrictions may apply.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, welcome back to Insurance Matchmaking. Elijah's with me again today. We're going over some kind of frequently asked questions regarding the healthcare marketplace. And as you're listening today, this open enrollment is live. You can go on healthcare.gov and shop your plans. We still recommend, and I think, actually, I'll let Elijah ask. He already told me what question he was going to ask next, and I'm kind of answering it before he asks it.
Yeah, so Matt, we were talking about, estimating income, what counts as income, and it can get a little confusing. So another question, why should I see an agent when I can sign myself up?
Yeah, and that's, I think the big one there is a lot of that is on the income. Because people aren't they're not counting their income, or they're looking, one of the things I think people get confused on that, and I know I'm not technically answering your question, but kind of going back to on the income thing, is the way it's asked on the application on the healthcare marketplace. It says, will you earn any income this month? And again, whether you are or aren't, other than like when you're applying in the middle of the year, you're applying for next year. The other thing is, the question is really worded. I don't like the way they word that question, because whether you earn any income this month or not, and it's in any month, really is immaterial. It's how much are you going to earn in that year that you have your health insurance. So, because I'll have people, and they'll answer at 0. Well, you don't qualify for a tax credit, because they answer hey, it's a government's website. I don't want to answer this question wrong and get in trouble, is what they're thinking. And so they'll answer the question literally how it's asked. Are you earning any income this month? No. Well, why aren't you earning income this month? Well, I just left this job and I don't start the new job till next week or next month. It's like, okay, how much money did you make on that first job for the first part of the year? And then how much are you going to make on the new job? And then we have to add those together to figure out, okay, this is how much your income's going to be for the year. This is what your tax credit will be. So, like I said, that's if you're applying during the year. So those are some things, we do this every day. We can help you figure that out. And as always, and I've said this, I don't know how many times on the radio, you don't pay for us. It doesn't affect how much your premium is. What the plan you pick, the price doesn't change because you used an agent, but how much you're paying may be less because you use an agent. And we figured out that this isn't the right plan for you, because we were going to look at what your prescriptions are, who are your doctors. We're going to look at your income and figure the plan that works for you. And as I mentioned already in the first segment of, hey, this bronze plan with some supplemental coverage to protect you against a high deductible may be much more affordable than going with that silver plan that has a low deductible. I always get a kick out of it. Somebody has a $3,000 or a $5,000 deductible on a silver plan. Well, I can't do that $7,500 deductible. I can never pay that. And it's like, well, you're probably going to have trouble paying $3,000 or $5,000. And again, you aren't going to have those deductibles unless something major happens. Now a $3,000 deductible, yes, you probably could meet that deductible if you have to have some type of surgery. In outpatient surgery, you probably would. You don't have to be hospitalized; just have a surgery, and you'd meet your deductible. $5,000 or $7,000, probably not. And that's where those supplemental plans come in to just protect you against it. It's I kind of put it as like with a car. You got an old, what do we call them, hoopties?
Yeah.
You got a hoopty, it's paid for, and it's not, the stereo in it's worth more than the car. You're not going to get what everybody likes to call full coverage insurance on that car, because if it wrecks, you're just going to go get another car. Well, that's kind of what a lot of people are doing with their health insurance, is they're paying for that full coverage and never using it. You may have a lower copay. It's nice to have a lower deductible, but is a lower deductible worth $250 a month? If you add up that $250 times 12, how much did you spend? You're paying, but if say it's $200, you're paying an extra $2,400 just to pay an extra $200. So it'd be another $1,000 versus $500, right?
Makes sense.
And so don't pay too much for your insurance.
So here's another question, Matt. My job offers insurance, but it's not great. Can I get a marketplace insurance plan instead?
And actually, the short answer on that is yes, absolutely. There's nothing stopping you from going to the marketplace and getting a plan, but you want help paying for it.
Yeah.
Yeah, you don't want to pay full price, because you'll be probably paying more than you're paying at your employer. But there is a formula, and it was 8.4%, I think is the number. Yeah. So if you're paying more than 8.4% of your gross income on your employer plan, then you can get the subsidy at the marketplace. And usually what we do is it's a lot easier to deal with round numbers, so we'll use 10%. So if what you're paying for your employer insurance isn't 10% of your gross income, it's less than 8.4%. So, and just raw numbers, say you're earning $500 a week, that's your gross, and your weekly cost for your health insurance is less than $50, you're probably not going to qualify because it's less than 10%. You could be close, but say you're getting $600 a week and you're paying less than $50 for your health insurance, it's probably going to be more likely to be under that 8.4%. Now, the other thing is, if you're married and have a family, a lot of times your family can use the marketplace because it's not affordable to put them on your plan. But unfortunately, I've had a lot of people say, I don't like this plan, it's crap. What's it costing you? Well, I'm paying $20 a paycheck, and you got to keep it. It can have a lousy deductible. It can have a high, co-pays, or you're having trouble finding a doctor in network. The marketplace doesn't care on that one. You just have to find a doctor that takes your plan. And that's been the way it's always been with group plans. They change carriers every so often. You just have to make sure that you are doing you're going to a doctor who will take your plan. And usually most of the time, the group plans, most doctors will be in network. But just because you don't like your plan, and a lot of times what people do, I don't like it, or I'm paying this for it, and then I show them the marketplace plan, or especially show them if they're the marketplace plan without the tax credit, and they're going, oh yeah, I'm not going for that.
And you kind of touched on it, but let's say my work insurance is affordable for me, but not for my family. Can they go through the marketplace and still get the subsidies? Right.
Yeah, because it's not affordable. And the other thing you were just reminded, the other thing I wanted to mention on that is sometimes with your employer, you'll have more than one option. They'll usually, it's kind of like they'll offer a bronze or they'll offer a silver plan that's going to have lower copays, lower deductible, but it's going to cost you more out of your paycheck each week. It's going to be based on that bronze plan, not the silver plan. So if you pick the silver plan and go, oh, this isn't affordable, do they have one that is lower so it would be affordable? And generally what's going to happen is, and if you're young, it's less I'm trying to remember the way I figured, but when you're younger or you're a new employee, yeah, there may be, but your share, you young guys are paying for the old guys. So older people might be able to do better on the marketplace, but again, if they've been working there for a while, their income's probably up to where their income is definitely covering their share. A lot of some employers will pay more than 50% of your insurance, but generally that's what it is. You're paying. They add up everybody that's on the group plan and then divide it by the number of employees and say, okay, this is going to be your share for your health insurance. and that's what comes out of your check. But and just kind of go a little bit more explanation on it. It's going to be how much are you paying or would be paying for the lowest cost health plan that your plan offers. It's not adding in your dental and vision, which those are, and I always run into that too. Most people, and a lot of times you can leave your employer plan and still keep your dental and vision at your employer, and I encourage people to do that. I cannot compete with the prices for your dental and vision plans that you're getting through payroll deduction. So unless it's a crappy, again, if it's a crappy dental plan and your dentist won't do anything with it, well, maybe we might do something else. But usually affordability-wise, that's going to be better.
I keep hearing about a tax form 1095A.
The 1095, yeah, that's a bane of my existence. So if you can know how to log into your healthcare marketplace account, they should send it to you. I think they have to send it by the end of February. So it's so if you want to try to file your income tax in January, maybe you can't do it because and it may be the end of January. I can't remember, but the government is required to supply you with that 1095A. Now, I do have clients. If you're my client and we've enrolled you, we usually, through our Health Sherpa account, we can get a copy of your 1095 and get it to you. So I do have, generally, I'll have people contact me like June or July. They did an extension on their taxes, and then they go, "Oh, I don't have my 1095. It should have come in the mail." So, if it looks like it's from the government, open it. Now there is junk mail that will look like it's supposed to be official mail, but it's supposed to say somewhere this is an advertisement. But definitely look at it, and it should come. It's just like if you get your W-2 mailed to your house, it'll say or bank interest statements that will say important tax information. It will say that on the envelope. So you do need that 1095A. You're going to get in trouble if you don't take that 1095 and use it because you use it to fill out another form to file on your taxes to reconcile what you received in tax credits. We talked about earlier is, how important is it to, correctly estimate your income. And then that 1095 is because I've got one client that got a letter saying, you need to prove that you filed your 2024 taxes to be able to get your tax credit for next year. So it's very important to make sure you file your taxes on time, especially if you're doing the marketplace. Make sure you file those taxes before you're going to be doing your health insurance. You want to file early if you can. If you can do extensions still, don't keep dragging it out. Get your tax done because it will affect your health insurance if you don't file regularly. We're actually kind of coming up on the end here. I just wanted to cover a few things before we break, as we say. At Libby Insurance, we can cover you from head to toe, and it doesn't have to cost you an arm and a leg. Maybe we stimulated some questions in your mind. If you go to insurancematchmaking.com, there's a comment section. You can say, "Hey, I like the questions you asked. Could you, can you answer this question on an upcoming show?" So that will help us. I can sit here and preach insurance all day long, but it can get a little boring, and I do want to make sure that we're getting good information and you're enjoying, sharing your time with us on a Saturday morning. Or obviously you can go on YouTube and listen to the shows later. That's the other thing on that website is there are links to the past shows. So some of this, like I said, some of this stuff, I feel like it's repetitive, but, I've got new listeners. The radio station changed the format, so there's different people that are catching my show because they weren't listening to the station when it was the news talk radio. Now that it's Christian music station, we've got some different listeners, and that's how we kind of catch you. Is your radio is tuned to that station, you turn it on for music, and wait a minute, who's this guy talking? Wait a minute. I've had that question. I'm glad he's answering that. So until next week, stay tuned to Grace 107.7, and Insurance Matchmaking will be back next Saturday at 10 o'clock.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.